Welcome everybody to Wall Street Reporter's next Super Stock live stream, November 18th. Look, we're doing this as a special, a breaking news type of live stream. I know we did something earlier in the week. I thought it was extremely important. I know Evan, you're very busy today because Friday is like your big meetings day with the team and all that. But I thought it was extremely important to share with investors, to walk them through the significance of the explosive numbers, the financials that came out last night. I mean, I'm shocked that the stock is not like skyrocketing today because the numbers are just I thought blew the roof of what anybody was expecting. So can you just walk us through I want you to give us the highlights and maybe explain the significance of it, because I think what the market is missing is they don't understand what we're seeing now is sequential quarter-over-quarter revenue growth. The plan that you announced at the start of the year is working.
Yeah, it is, Jack. And thanks for recognizing it. I mean, it's true that the stock's not really responding. I think we have laid the plan out. The plan is playing out. I think Q3 was really just the tip of the iceberg in terms of our business potential. Q3, we've mentioned, was a transformational quarter for NexTech as demand has now started to surge for 3D models globally from our existing customers that we signed up earlier in the year, from Amazon, and as we've mentioned, Target and Walmart in the waiting room. We haven't signed a deal yet with them, but I would not be surprised if that did come to pass, where we become the 3D model supplier for not just Amazon, but Amazon, Target, and Walmart. And that would be quite dramatic. From my perspective, that's kind of the holy grail. I think at that point, I'm done. Drop the mic, right? It's like, okay.
We know you're never going to be done. It would never. But
kind of like, how many
pipeline,
more?
Also, the pipeline. You haven't even mentioned the pipeline of other deals.
What I mean by done is this: we've talked endlessly, relentlessly about all the deals we've been signing in e-com, for the past year. And so, when you get like a trifecta, Walmart, Target, and Amazon, I don't think we need to talk about the deals. We're going to be talking about the numbers and how they just keep scaling. And so, let's just talk about sequential growth for a second, because I think
the highlights. Walk us through the highlights.
We're going to get to the numbers, but I just want to explain what sequential growth can do and why it's just the word sequential growth. But think of it more as like compounding interest, which is how Warren Buffett became, the most successful and richest investor on the planet today. If you generate $1 million in Q1, let's say, and sequentially you're able to grow that by 100%, that means the next quarter you're reporting $2 million. And if you could sequentially grow that by 100%, the next quarter you're reporting $4 million. And if you could sequentially grow that by 100%, the next quarter you're reporting $8 million. So you started
and then you add the multiple
$1 million.
All of a sudden, the expansion is.
You started the year with $1 million. You end the year with $8 million. That is what the stock market pays massive multiples and premiums for. When you get that kind of sequential growth, nobody knows where it goes.
Yeah, because the market starts extrapolating. That's
everybody
why you
starts
see
extrapolating. So
bananas.
So we reported sequential 192% revenue growth in our 3D modeling business from Q2 to Q3. That's 192%. Now, of course, these numbers are small. There's no denying that, because we're just beginning. But again, $1 million turns into $2 million, $4 million, $8 million, as long as the sequential growth continues. I believe that we're going to see triple-digit sequential growth continue. And so that's really the story here. Our Q3 numbers, our technology service revenue up 66% sequentially over Q2. Our 3D modeling revenue surged 192% sequentially over Q2. Our 3D technology service gross profit margin went to 60% versus 37%. That's like an 80% increase in gross profit margin, which is huge. If you look at our gross profit historically, I don't remember the last time we had a 60% gross profit margin. The reason why the gross profit margin is getting beefed up is because we've exited the e-com business, which was high dollars, low margin business. Now, the dollars are a little lower because we're transitioning, so it's temporary, but the margins are surging. And that is critical for an investor. When you're investing in companies, you want to see revenue and sequential growth, and you want to see the margin go up. If a company has no profit margins, 10%, 20%, it almost doesn't matter how much money they generate because the margins are so thin, there's nothing left for the company to reinvest or, hire employees and on and on. So with a 60%, that's why investors love investing in tech companies, because tech companies historically have the highest profit margins in the market. And, once you invest in your technology, you really have an opportunity to just start printing money. So if we look at
Especially with the SaaS, the SaaS model you have, especially with Toggle 3D and everything else, where everything,
right,
the AI, everything becomes automated. So now,
that's it.
it's just everything becomes, your costs are shrinking and shrinking. The value of the business is growing and growing. Also, the AI, let's mention also again, the more stuff you run through it, the more data that comes in, the smarter it becomes. The
Yes.
system is becoming smarter and smarter. That makes it more and more valuable. That increases your competitive advantage because now the distance you're moving so far away from the competition that they can't catch up, and that's what makes these things so valuable. So again, this is why this stock could have this potential massive move, because once you have a couple of these quarters of this, triple digit sequential growth, if you can actually do it. Now again, you're saying you're going to do it. Now we got to see deliver. We got to see another quarter or two.
Let me just put this out there for you, Jack. So true, it has to happen, right? But we did announce a $700,000 purchase order to be delivered in Q4. We're still on target for that. What does that mean? It means I'm very confident that we're going to deliver another triple digit quarter of growth for sequential growth for our 3D modeling business. And if we land, let's say a Target or a Walmart, that's a turbo. Hit the turbo button. I mean, I don't know.
And then you have some other. I mean, you have also pipeline of other deals. I mean,
No, there's a ton of deals that are all starting to come to fruition. But look, there's a couple of big players: Amazon, Target, Walmart. They are the biggest. Everybody knows that. So from my perspective, we have Amazon. It really is enough as they open up their platform. That would be kind of enough to keep us very busy. But we are ambitious, and I would love to have Target and Walmart logos on our website along with Amazon and say we supply these three companies.
Everybody, basically, this is the gold standard.
Yeah,
NexTech is the gold standard.
and so when you think about the sequential growth, that's where you get sequential growth. Now, we haven't even talked about, you see, this is the thing about NexTech that is to the benefit of shareholders, but a bit frustrating to me, is that just like with ARway, we had all this value locked up in NexTech with our spatial computing platform. We just announced the NexTech Event Solutions. NexTech Event Solutions has unlimited blue sky opportunity in the event space. We're not even factoring that into our sequential quarter-over-quarter growth. We're just talking about 3D modeling business. We haven't even factored in Toggle 3D because that's not really part of the 3D modeling business. That's a design and software studio. So when you combine it all, Jack, you have The 3D modeling business, Walmart's already in the bag. Target and not Walmart, sorry, Amazon's in the bag. Walmart and Target are in the waiting room. Then you have Toggle 3D, which is coming to market and going to
Wait, Evan, hold on a second. You said Walmart is in the bag.
No, I said that was a mistake. I misspoke. Amazon's in the bag.
Amazon. Oh, okay.
Walmart and Target are in the waiting room.
Okay. Just to be clear. Okay.
Languaging. I'm clarifying. Yeah.
Okay.
So what I'm getting at though is that that's one thing that's happening, and that would be enough to keep me very, very busy. But we also have Toggle 3D, which is being launched as a SaaS business, as a design studio to compete with Adobe. And we also have NexTech Event Solutions run by Malia and her team, who's, these are industry veterans who are tapping all of their connections and bringing ARway, bringing AR ties 3D modeling, wayfinding, and even Toggle 3D to the event industry, which is ripe for disruption. So when you add all that up, Jack, 2023 is shaping up to be a year that I think is just going to be one of those years that goes into the history books for NexTech. One of those years that we look back in awe and we just say, wow, it just all came together after talking about it on your show endlessly, relentlessly, nonstop, putting out press releases. Look, there's a lot of hype out there.
Yeah.
But we back it up. We're not just talking. We actually deliver the results. You say it, but now I'm saying it. Yesterday we announced our Q3 numbers. We are delivering. And from my seat where I'm sitting, I believe we're going to continue to deliver the same type of results quarter after quarter. And, I don't see it stopping because the demand in the market is really just getting started. Like, we've been talking about this for a long time. So people might think like, oh, this has been going on for 12 months or 24 months or whatever.
No, it's just
not true. We've been talking about it. Yes. We've been waiting for the demand to show up. Yes, it just showed up. It's just showing up now. And so, it's starting to show up in our numbers. And that's a key piece for our investors to think about, is that, look, you're investing in the future. If you buy a stock, any stock today, you're not buying the past. You're buying the future. And from a future standpoint, the future of the 3D modeling business is much, much, much bigger than anything we've reported to date. And so that's the thing that you're buying, is that future revenue from the 3D modeling business, the future revenue from ARway, the future revenue from Toggle 3D, the future revenue from NexTech Event Solutions. That's the investment decision that you make today that pays off in the future sometime. That's how I think about every time I make an investment.
Yes, I just want to add a comment, just a quick comment, is that two things. One is that, anytime we see these massive gains in stocks, all these things, a lot of it is, it's building and building and building, and then all of a sudden it happens all at once. So like, it might be, it might be working on work, and then all of a sudden within a few months, you have this massive 10x, 20x move, which, we talk about as like the 10 bagger window. NexTech is in that window right now. So everything you've been doing, it's been accumulating, and it's like building up, and then it explodes. And that's the thing that investors also have to look at, is what is this going to look like, 12 months from now, because it's going to be a completely transformed company. So the way to analyze this is really because also the market is not valuing Toggle 3D, the event. There's a lot of stuff, which is the beauty of it. I mean, I know, it's frustrating that the stock, that it's not being valued yet, but for anybody who's watching it right now, there's a lot of, there's a lot more power. There's a lot more, the torque left, there's a lot more in this. But here's I think what I kind of want to bring up is, the might be another turbocharger that we've been talking about. We talked about a couple of years ago. Then all of a sudden, it's again just like this. It's happening now. It's been building and building. It's going to happen like imminently, and that is Apple. The AR glasses is coming out. Like, okay, so this guy Jason Calacanis, who is he's a tech. Actually, I remember him from like New York, like years back. He had a magazine called Silicon Valley Report, which actually I was trying to buy. But the guy's like a major VC investor. I mean, not big, but he's probably made a couple $100 million. He's advising Elon Musk with Tesla. He's involved with Chamath. He's basically the guy's a major insider in Silicon Valley. He does like these videos on YouTube, and he was saying he got the inside scoop. Apple is going to be launching the AR glasses. I mean, like imminently. They already have developers, which they're bringing into their they have these like secret rooms at an undisclosed location. They basically blindfold the guy. They bring him in and say, okay, you can work on the app here. We're not going to, so there's a lot of stuff going on. Like right now, it's happening now. It's like, this is not talking. It's imminent. And here's the thing, Evan, as we know, this is the big thing is when Apple does this, that is going to be the next hot thing. The AR glasses from Apple, it's going to create there's going to be a massive market demand for anything to do with pure play AR stocks.
Yeah,
and
there
that
will be lines.
is what we've been waiting for 3 years.
100%, Jack. There will be lines around the block and down the street to get these glasses. I know I'm going to get a pair. I know I'm going to buy them for my team. I know all of enterprise companies are going to buy these glasses. I know every kid's going to want these glasses. And if you think about it, they're going to dominate the market. From what I'm reading, I totally agree with you. It's going to be a pair of hybrid glasses, AR and VR glasses, which means the demand for 3D, again, is going to go through the roof. The demand for our ARway solution,
that's the thing we've been waiting. That's for ARway. Actually, that is the catalyst for ARway, the glass.
Yeah. That is one of the catalysts. There's a lot of catalysts, but yes, that's one of the big catalysts for ARway. It's also a big catalyst for e-com, believe it or not, and shopping online.
For everything you're doing, basically, it's the flywheel.
Everything. Yeah,
it's the flywheel. I mean, this is the thing that we've been waiting for. That was part of the big thesis. 3 years ago is okay when the AR glasses come out, the market, because again, the market loves these.
You're right. So I think it's important to put it into context. So we have a spatial computing platform. The glasses are a spatial computing viewing device, right? So right now, our spatial computing platform, ARway, it works on your phone, right? This is your spatial computing viewer, but it's suboptimal. It's okay, but it's suboptimal. The optimal version of that is the glasses, and that is what Apple's going to be releasing, and then everybody's going to have a pair, and then it's kind of like, okay, the spatial computing market is going to explode. You got to have software to go with the hardware. You got to have use cases. That's why when Google Glass came out, it was a flop because there was no software. There was no NexTech with ARway. There was nothing to see in the Google Glass. It was like, oh, I buy a pair of Google glasses, and there's nothing. I got nothing to do with them.
It's like when the PC first came out. There was just a couple of video games like Pong or whatever. There was no I couldn't do it.
Right, and then all of a sudden, all the software starts to get created, and everybody's like, okay, I want to use Microsoft.
The difference now is we have like software. We have like NexTech. So here's the amazing thing again. Like the big thing is, I think when the Apple AR glasses are released, which looks like it's going to happen probably in the next couple of months. Maybe it could be a surprise even earlier. But all of a sudden, AR 3D model, all this stuff is going to be in the news constantly. And what does that do? You got to think of the investor psychology, right? So investors are going to be looking, hey, what's the pure play AR stock? Now here's the thing. There isn't really any besides NexTech. I mean, there's a few kind of like on the margin or whatever.
I'm gonna just predict what's gonna happen based upon.
It's gonna be a must own. It's gonna be a must own. It's gonna be a frenzy. I believe. It's an opinion. It's not fact.
Yeah.
feeding frenzy.
No, so Jack, all you have to do is go back to 2020. Let's just revisit that. I mean, nobody really wants to talk about the pandemic, but let's revisit the happy days of Zoom going up to the moon, right? Zoom went to $600 or whatever it peaked at. And I remember that stock, and there was a whole, group of pandemic stocks that were running,
Exactly.
right?
It's the theme.
And yeah, it's a theme. That's what I'm getting at. Is so during that run, NexTech stock became a pandemic stock. And
And
so
it wasn't even a massive. It was like, sort of tangentially pandemic, but now you're
well,
really in the bullseye of the theme.
right,
You're literally
right.
in the
Well,
bullseye.
that's
So
what I'm
you
that's
are like the Zoom,
yeah,
like the
so
Zoom
what I'm
of
getting
AR.
at is back then our stock ran because we had a virtual events business and people were comparing us to Zoom looking for the new Zoom. So when Apple releases the glasses, the theory is Apple stock is going to go up because everybody's going to
No,
want
no,
to buy
it's
because
the
of the
pure
glasses.
plays.
But after Apple stock goes up and they sell, a gazillion of these headsets, everybody starts looking for the next rung on the ladder, right? Because Apple's $150 stock or whatever it is. And so everybody's like, oh, I want to buy a company that's in the same, that's going to benefit from the
Pure
glass.
play. They want the pure
Yeah,
play,
pure
basically.
play. And so the next thing is they start doing screens on the Bloomberg machine. We're going to show up because we have research reports out there, because we do these types of live streams and there's tons of
All
content
the
out there.
groundwork has been
All this,
laid. Basically, Next has
exactly.
laid the groundwork,
We're doing the
foundation.
groundwork right now. And we're talking to our investor base and literally connecting the dots for them. And saying
It's
like,
crazy. It's crazy. It's basically you've been building this foundation. Look, in order to have like a 200-story skyscraper, you got to have a big, deep foundation. And Nextech has been building this big, deep foundation for the last 3 years, and now it could support. You could actually support this massive skyscraper because again,
well,
unlike the pandemic where we're sort of tangential. I mean, I guess live events were, but now you are the the bullseye
yeah,
of that theme.
yeah.
There's nobody else. What other AR stocks are there? There's a couple of like they're kind of a marginal whatever, but this is e-commerce tied in. You got Amazon, you got all this stuff lines up, and I
Well,
think that
well, well, yeah, you're bringing up a good point. So the other companies that are
I'm
out
pumped
there,
up, Evan. I'm really pumped up. I think this is going to be the thing. Again, this is my opinion. I'm not. This is not company,
Jack,
official.
it's really
I
hard to
think
get you pumped,
this is going
Jack.
to be this thing that could make the stock. I don't want to use numbers
It's
because I
yeah,
don't want to be
it's
accused of
it's
over
really,
promotion.
really hard to get you pumped up, Jack. I mean, you're never excited.
We can see. I think numbers that's going to make people's heads explode. Like
But
the
here's
Zoom. What happened with the Zoom?
yeah,
That's what we can
but
see.
well, what's interesting with Apple is that they wait. They do wait to get to market, right? And they've waited, patiently waited. There's a couple of companies that have tried to jump into the fray, jump into the market. There's a couple of companies that make the glasses. And I've said this from day one, all the way back in 2018, 2019, when I discovered these companies that have like a pair of glasses, AR glasses. I'm just like, those companies are going to get squashed
Yeah.
like bugs when Apple comes out with their glasses. And I was just like, I'm never going to want to compete with a company like Apple. That's just a fool's, errand, right? So,
Who wants to do
I,
hardware anyway? I mean, this.
yeah, hardware is not a great
You want to be in
business.
the SaaS business. What you're doing now.
So we went off in a completely different direction and focused on creating the content that's viewable in across all the glasses. It doesn't matter if it's Apple's glasses, Google's glasses, or if it's Qualcomm's glass. I mean, there's going to be a whole array of glasses.
The more the merrier.
Our
They're all
3D
going to
models,
drive the
they're
market.
all
To the next thing.
interoperable.
It's going to be insane. It's going to
Yeah.
be insane.
Yeah, and so it's going to be just like the amount of demand for everything 3D, which is why NVIDIA is investing in 3D. It's why Microsoft is investing in 3D. It's why Adobe keeps on snapping up these companies and investing in 3D. These guys are positioning right in front of this. Look, it's the fiduciary duty of the company to invest in the future, because again, that's what this is all about. The past really doesn't matter. It's really about what's going to happen tomorrow, what's going to
The
happen
next
next
big
year,
thing.
and
Yeah.
what's going to happen over the next 10 years. My belief, Jack, is that over the next 10 years, everybody's going to be wearing a pair of glasses. You and I are going to have a call, and you're going to have your Apple glass. Apple AR. I'm going to have my Apple AR glasses. All of our, viewers, they're going to have theirs. We're going to be holograms. We're going to be demoing and talking, and it's all going to be holographic. And it's going to be a completely different world than we're in today. And like you said, so we are taking all of our technology, all of our tech stack, and putting it on the table, developing, bringing it to market. Anything that was on kind of pause. Even this morning I had a call. Actually, it was yesterday, about our HoloX. The hologram creator app. And that was, super exciting for us. Remember, you could scan a QR code and out pops the
Oh
hologram.
yeah, the genie.
Consumer, the genie in the bottle.
Somebody was asked. Oh, I saw a question about that.
Yeah.
Yeah.
So we're now taking that technology. We're taking the genie technology, pulling it forward. It's very hard for a small company to do everything simultaneously. It's like a three-ring circus, right? It's not so easy. So, some of the things we put on pause, that was one of them. We're now taking it off the pause button and bringing it back, and it's now going to get launched. In fact, we have a customer that wants these human holograms, and so there's just unlimited potential. Which is why, if you look at NexTech, Jack, we built this company, in an agnostic way, where it wasn't like, oh, we're only going to do 3D modeling, and that's all we're ever going to do to the end of days. And we're going to be religious about just 3D models. That's our business. And there's a lot of companies that are like that. I was pretty agnostic, and I was like, well, there's so much opportunity here.
No, that's the thing that's made the stock work, is that you've been very opportunistic, and I think this is the valuable thing that investors need to understand, is like, with you in place. And again, I'm not trying to hype you up, but look, it's important to have a CEO in place who is able to seize opportunities, who looks at the market, who sees where an opportunity is, and can take advantage of those opportunities. And that's why the company has been very nimble, very agile throughout the last 3 years. I mean, you made the right acquisitions at the right time, to raise the money at the right time. And unlike, again, I don't want to make, but we've seen companies that don't seize the opportunity at the right time. So it's very important that it's like everything with this thing is really, it's perfectly positioned. It's funny, you were talking about, okay, we're going to be having the glasses in 10 years. I remember, like, in 1995, like, I was doing actually IR for a company, and there was a tech company, and the guy said, yeah, there's, on your cell phone. I remember the cell phones were like a brick, right?
Yeah.
Like a smaller brick. But he says, yeah, they're going to have a phone in there, and they're going to have email. And I was like, what's email? Like, this is 95. They didn't have email yet, really.
Right.
And I mean, like, I heard, email on a phone.
Yeah.
Who wants a phone? Who wants a camera on the phone? I was like, what?
Yeah.
And,
Well,
but
I remember.
the phone, Evan, you realize what's going to happen with Apple, because do you remember when the iPhone first came out? All of a sudden, the big thing was everybody was looking to invest in, like, the app developers.
Yeah.
Anything to do with apps, anything to do with mobile apps was red hot for a number of years, because it was driven. And the same thing is going to be with this. There's going to be so much attention going into AR. And again, what other stocks are there that are pure play AR stocks? I don't think there are any left standing really right now.
No.
You're going to basically suck up all the demand of investors.
It could happen, Jack. My last thing I want to kind of maybe speak to is that not only have we positioned our technology, but we've positioned our financial health and really worked tirelessly to reduce our burn and put us in a position so that we don't need to raise any additional capital through additional financings. And, this past quarter, I think for the 3 months, our burn was under $2 million. And last year, 2021, I think we were burning 2 million a month. So it was like, so think about that.
That's a big U-turn. It's very, I mean, again, it
It's a
demonstrates the
dramatic,
agility of
yeah.
the company. I mean,
That's
you're
what I'm
going with
saying.
the market. It's like
Yeah.
you're able to be very agile.
Yeah, so there's been, there's lots of naysayers, lots of people that, throw all kinds of nonsense comments, but the bottom line is that we're financially stable. Our revenue is growing, and there is the potential. I'm not saying it's guaranteed that in 2023 that we go cash flow positive. Now, I'm not guaranteeing that. I'm just saying if everything just explodes, we're not that far away.
Yeah.
That it's not like, you need something dramatic to happen. You just need to see the market develop. We need to continue to perform and execute. And from my perspective, I'd rather not have to raise any additional capital. That is part of the reason, a big part of the reason why these spinouts are so valuable for our shareholders. And I just want to take a moment to explain, some of that. So, again, we have all these different divisions inside NexTech, AR Ties 3D, Toggle 3D. Now we have the events business, which was MapD. Now it's NexTech Event Solutions, right? And all these businesses in ARway take an enormous amount of time, energy, and money to build to a commercial level, to market, to hire a sales force, to get the marketing. These are businesses. They need to be fed. And so in the beginning, you lose money. And then you start to build a ramp of revenue and customers, right? And then you make money. Everybody gets that. Well, if you have one business as a small cap startup, it's a challenge. That's a challenge. That's the challenge for, all the small cap companies out there. We have 4 or 5 businesses that we operate inside NexTech. 4 or 5. It's, the 3-ring circus isn't even accurate. It's more like a 5.
I don't think that's the thing. I don't think investors understand that because it's not reflected.
It's like a 5-ring circus. So the way I look at it is,
it's the unicorn farm, the unicorn. It's the unicorn factory that's busy.
So the way I look at it, Jack, is there's a limit to what we can do internally with all these businesses because as they start to get developed and they get to the point where they're commercial ready, they need more money, they need more capital, and they need a focused team, right? Where it's not like, oh, we're part of NexTech. It's like, no, we're just ARway now, and we're focused on just spatial mapping. And we hire new people that are just focused on that. So it really is important to do these spinouts. It's non-dilutive because if we raise money for the spinout, it's not against NexTech stock. It's on the new company. And NexTech benefits from the valuation of the spinout going up. And so there's like from our perspective, $100,000 in payroll just disappeared. It's now part of it's ARway's payroll. So all of a sudden, back to NexTech going cash flow positive. Every time we do a spinout, we reduce our burn. If we reduce our burn enough, we're cash flow positive, right? I mean, it's just an equation.
Yeah.
So
I think all the stars, I mean, really, like if you look at it, all the stars are really lined up right now between, the Apple AR glasses, the theme becoming hot, between, the massive increases of the sequential quarter-over-quarter revenue growth in the 3D products. You're getting out of the old legacy business of the e-commerce, which I think a lot of people kind of, always kind of bothered, I think, investors. Like there was always like friction there for whatever reason.
Yeah.
And it's interesting. As soon as you announced you were getting rid of it, the stock actually took off. I mean, basically, it was like, it didn't even matter.
But here's the thing, Jack. The timing of that is critical. If we had announced, if we had announced we were getting rid of that at the wrong time,
you couldn't do it in 2020.
2020, the market was going crazy. 2021, we were kind of just trying to manage the other side of all of the pandemic. So, from my perspective, the team is really locked in. You got Apple glasses. You have ARway, our spin out, which now represents $26 million in value on our balance sheet. Show me another company, Jack, that you have covered, that has a $26 million asset that they control on their balance sheet in another public company. It just doesn't, it's not common. And if we do another spin out, we could end up with 50 million sitting there.
Maybe even more, because there's
And
going to be much more anticipation, because they saw,
yeah,
the AR was
and
in
by the
the
time we do
9X.
another spin out, maybe ARway is trading at $10 instead of at $2. And maybe, I mean, it could happen because
Yeah.
all the investors in ARway are long-term investors. They're friendly investors. And they've all been part of the NexTech story. And so, it's kind of like we've created our own little ecosystem to be successful in. And from my perspective, that's a very difficult thing to do because, in the beginning, when I started this, nobody really believed, nobody understood what augmented reality or 3D modeling was very early, right? And so now all
No,
of a sudden,
when we first talked, you had to explain to me what AR was. This is only 3 years. I didn't like.
yeah, I know. Not just you.
Yeah.
All the investors were like, "What? How does it work?" But how does it work, Evan?
Yeah.
And I had to show them, like I had to actually demo it. And so now those days are over. Now you have Apple about to release the glasses, and you have everybody kind of understanding what it is because of companies like Amazon that are bringing 3D models to the
They're
market.
basically pulling you forward now. Before, you had to do all the pushing, all the heavy lift. Now you're being pulled forward by these mega trends of these, the $5 trillion, e-commerce industry, the Amazons, the guys in the waiting room, which we mentioned, potentially, Target, Walmart could be, coming in next. Then you have the Apple AR glasses, which are going to make everything so much easier and
Yeah.
create massive demand for, the software, right? So it's going to be like, I think 2023, really, like, things are really lined up now like we've really never had before. So it's like, it's everything is in place, to have this, like, exponential increase in potential valuation. I mean, it's like, it's an incredible opportunity. That's why I wanted to do this. Evan, let's wrap up. I know you're busy. Let's see if we can get to some audience questions. Okay, so how does ARway stock show up on NexTech books as an investment?
In Q4, I mean, our auditors and our CFO are going to figure that out, so that it'll show up. If ARway does grow a lot, yes, NexTech will sell some to use in NexTech's business. Yes, that is the benefit of having an investment, is that we can,
Monetize it.
monetize it exactly.
When will Toggle 3D be ready to roll out once the beta is complete?
I'm told by the Toggle team that it's going to be either this month or next month, but it's soon. It's, within the next, couple of weeks, 30 days.
Is there a date for when Toggle 3D will be embedded with the Amazon site?
No. So the Toggle 3D with, Amazon would be us getting some Amazon customers to give us their CAD files and using it in Toggle 3D. But NexTech's using Toggle 3D for 3D modeling. It's part of our AI initiative. So as we continue to improve and bring Toggle 3D to the market, we're going to use the AI to create the 3D models on Toggle.
How much revenue do you think ARway can do at max?
I mean, it's a big number. It's hard for me to put a number on it. It's big. It's very, very big. If you think about wayfinding, and you think about every indoor space, every mall, every office building, every museum, every stadium, every university campus. I mean, it's massive. It's multiple billions of dollars worth of business out there. And we think, we have the best solution in the market. Like, clearly it hasn't happened yet, right? Like, you go into a building, there is no augmented reality wayfind. It doesn't exist. We're doing the pioneering work. We're bringing it to the market. We have that first mover advantage. So we do feel like we can own that market.
Here's a good question. So Oliver's basically is asking, like, will you need to like increase your infrastructure? I mean, that's
A little. So Oliver, the good news, Oliver, is we're seasoned, right? We went through this massive growth spurt during 2020 and hired everybody and their cousin to come work for us. That's not going to happen again. So what I can tell you is we're hiring specialists like AI specialists, that type of thing. We have a large team in India. Roughly 25% of our workforce is now in India, and that is where we expand. And so, to give you an idea of the cost of hiring an Indian full stack superstar developer, $3,000 a month, $36,000 a year salary. That superstar developer in the US is easy 200.
no.
250.
And then they want to work part-time, remotely. They want free
Right.
lunch,
Right.
massages.
Right.
This is
Yeah.
this is who everybody. That's what Musk is getting rid of all. This is because those guys are costing the company billions of dollars. I mean,
Right.
benefits,
So
homes
that's
in the office.
so we're not going to follow that path. We're expanding. We're being very frugal. We're not, in terms of our office space. We're actually going to limit that to bare bones minimum. Everything that we do is remote. So no, we have absolutely no intention of ramping up our expenditures. We're only incrementally building our team, and that's really an important piece to understanding NexTech.
The patent question comes up a couple times. Do you okay? So can you give us just a update? What are the patents?
We've announced that we've filed, 6 patents. I think that's the number. So we just have to be patient and wait for the patents to get approved.
Okay. Bottom line, Evan, look, thank you for doing this like last minute. I think this is gonna be very valuable for people to watch later. But yeah, I mean, between these financial numbers that are really essentially validating the whole investment thesis, everything we've been talking about, that the growth is happening. It's a pure play AR business now. We're seeing the market demand. It's not just fantasy. It's not hype. We're actually seeing real demand coming in from blue chip players, the Amazons. Those numbers are showing up. There's going to be sequential revenue growth, and on the horizon, we got the blue sky potential from what happens when Apple launches the AR glasses. I think that could create massive demand for AR stocks, and on top of that, we have the potential more spinouts, more baby unicorns from all that stuff. It's an incredible situation here.
Yes. Yeah, I'm excited for the future, and my team is excited for the future, and we can't wait to celebrate the future with our investors.
Fantastic. Evan, thank you again. Thank you, everybody, for joining us. We'll see you on our next live stream.
Thanks, John.